We do have Rivian's numbers. They are out. Phil LeBeau has them. Hey, Phil.
Hey, Mike, for the second quarter, these numbers are a little bit better than what the street was expecting from Rivian. A loss of $1.62 a share, 1 penny better than expected. And then revenues coming in slightly better than expected at $364 million. The street expecting revenues of $337.5 million. In terms of production, they produced more than 4,400 vehicles in the second quarter, delivering 4,467. We've known those numbers for a while. It ended Q2 with $15.4 billion in cash, producing 8,000 vehicles as of June 30th. That's important because they are reaffirming their guidance for full-year production of 25,000 vehicles. That's going to be a relief for investors. However, there is new guidance from the company for the full year. The company now expecting a greater loss, a $700 million greater loss. They now have an expectation of an annual EBITDA loss of $5.4 billion. They have net pre-orders as of the end of the second quarter of 93,000 vehicles. That's an increase from the previous guidance in May, where it was just over 90,000 vehicles. They're looking to add a second shift at the end of the third quarter. And they also are saying that the supply chain, it continues to be a constraint on the growth of production. We'll be hearing more from RJ Scarinch, the CEO, coming up in about 45 minutes. He's going to talk about that because I'm sure that's the primary question many analysts have. Just where are the problems within the supply chain? How fragile is it, so to speak? Finally, they are confident that they are on schedule to launch the R2. That's the lower-priced, smaller SUV in Georgia starting in 2025. So again, better than expected numbers. Not a lot better, but a little bit better than expected numbers for the second quarter from Rivian. However, they are lowering their guidance, expecting a larger full-year annual loss. Mike, back to you.
Phil, thanks. Yeah, the stock trying to work through the sort of push and pull within those numbers, it looks like. This is a stock that has, doubled off the lows, but still well off those post-IPO highs. Jason, just in general, is this the type of situation that's going to come back into favor? Maybe it already has in some respects come back into favor in terms of long-term secular growth story. We're not getting earnings right up front. It's not what anybody wanted a few months ago, but is it the kind of longer-term opportunity that makes any more sense today?
Yeah, it's a good question, Mike. Obviously, this is a tough trade. I mean, the stock's down 60% year to date. It's 200 times sales. Obviously, it's no earnings, as you mentioned. But this story is all about production and supply chains. How are they navigating through supply chains? 25,000 cars is the number. That's what they're trying to reach. So that's going to be very important. I mean, this is a very nascent business. It's very early stage. So, I mean, for me, these are names that are kind of in that art complex where it's just really hard to look at them as opportunities right now, especially with the Feds very much a part of the game and very much engaged. So I would fade it here, maybe look at it in a couple quarters and, going into next year and see what it might look like, the environment, to see whether these types of names make sense.
Yeah. And Anastasia, I mean, I guess the question is we got we have the new law coming through that's going to at least to some degree help sentiment in this group. But this company's getting a fair amount of credit already for how fast it can grow at a $30+ billion valuation.
Yeah, I don't want to comment specifically on the valuation of this company broadly, but I will say that my outlook for high growth tech stocks or high growth stocks period is a little bit better because we have seen so much money come out of the space. We have seen such a big reset in valuations. And when I think about electric vehicles specifically, this is a really big inflection point for electric vehicles. I mean, globally, EV sales this year, the first quarter up 80% year over year. In the United States, they're up 60%, 62% year over year. And if you look at the 2022 numbers, they've accelerated a lot. 2023 expected to do the same. So if you look at a company like Rivian, they're making X number of units, but that's going to grow pretty significantly and pretty exponentially over the coming years. So consumers have more EV choices. The battery costs are going down. The break-evens are getting closer to the conventional cars. So I think we are at that inflection point in EVs. And, when do you buy this? In 2021, when valuations are here, when everybody did a SPAC? I don't think so. I think this is the time that you actually look at the electric vehicle space here.